Welcome, everyone, to a new year, 2025. I'm here with Matt Piepenburg, my good friend and colleague. Um, and we're going to try to figure out what's likely to happen in the coming year and thereafter, because uh, in our view, we're now approaching a risk structure or a risk picture for the world, which has basically not been seen for decades or maybe longer.
Mm,
Um, and as many know, my prime concern is always worrying about risk, protecting risk. And that's why we are in the gold business, because we think that when it comes to protecting wealth, is basically the best instrument there is.
mm,
Looking at risk, I think, of course, we are at the end of a monetary era, an era that probably started when the Fed was formed in 1913 or 1971 when Nixon closed the gold window. And
mm,
I think eras don't finish quickly, but as I have explained in many articles and interviews, that I think we're entering the exponential phase of that era. And that means that you see it in all areas of the economy and of politics. You see look at all the countries in Europe, for example. They all have political problems. They don't have any proper leadership. France and Germany, the biggest two of the biggest economies in Europe, they're having massive problems and no leadership, change of governments, no support for the ruling government. UK has got the most disastrous government with the Labour Party that is already, if there was an election tomorrow, they would not be in power anymore, although they had a great majority only a few months ago when there was an election. And that's what's happening. On the other hand, and Matt will talk more about that, in America, of course, now we have a president that actually, the incumbent president who has a majority. But that will also, America will have major problems also. So
mm,
the political risk is major. Of course, we worry a lot about the economic risk, and that is not going to change. The debt has going up exponentially, and we foresee now uh, deficits in all countries accelerating further, and therefore debts accelerating further, and therefore, of course, inflation going up further. And remember that inflation is not prices going up. It's inflation is the currency going down.
mm,
And as a major difference, government always says, well, prices are going up. But it's not, it's just the value of the money, your dollar or your euro, your pound in your pocket that's going down because governments are continuously destroying the value of your money or of your currency.
mm,
Just we look at, I've shown that example before, 71, you bought a 12 kilo or 400-ounce gold bar for $14,000. 14,000 for 12 kilos, 400 ounces. Today, that gold bar is worth $1 million. And that's not the gold price going up. That's your currency, whether it's the pound or the dollar or the euro, going down by 99% since 1971. And you only if you even if you take just since 2000, most currencies are down about 80%. So this is the real disaster. And as Voltaire said, every currency will reach its intrinsic value, which is zero, and that's
mm,
what we are on the way to now. So that's a major risk, and that needs to be protected. We believe, or I believe strongly, that the stock market is going to collapse. Whether it's going to do it this year or not, I think there's a high risk that it will do. Stocks are massively overvalued. Matt will talk more about the details of that. Uh, but that overvaluation, no trees grow to heaven. And as I said, this is not just we're not just going to see a correction now. We're going to see a major downturn in stock markets and a very long term a downturn. It could be it could be years, it could be decades. Uh,
mm,
and just like between 1929 and 1954, when that was the first time the Dow reached the 1929 peak. So
mm,
it can take a very long time. And the same debt markets are, I mean, that's a disaster. Whoever buys government debts is going to lose a lot of money because governments are going bust because they issue so much debt. And so that will affect the risk that you are looking at, because if you hold government bonds, they will just go down in value dramatically, and interest rates will go up. In my view, we are in a rising interest rate cycle. So, that is not a pretty situation for both the world and for investors. And I haven't even talked about, Matt will probably cover that a bit more, the situations in Ukraine and in Syria are not going to be easily resolved. Trump thought he would do it in a day. If he does it in a few years, I would be surprised, because Middle East is never going to go away. And the threat that America sees in Russia is so major that they're not going to give in on anything. And as you probably heard in the news today, now America is going to buy Greenland, or make Greenland a 51st or 52nd state, because
After
that's strategically
Canada.
right. After Canada, yes.
Yeah.
So,
Yeah.
but so we can laugh at that, but that is, so we're looking at serious geopolitical issues here. And the protection of your obviously of your wealth is more important than ever. People who are in the stock market thinks it will always go up, but Matt will now go in to the details of why that is not going to be the case. So Matt, why don't you take over and look at some of the details?
Yeah, and just, we should just chime in. I mean, you and I agree on so many things. I don't think we'll disagree on much here as well. I mean, market risk is one of the many risks we're looking at, including the purchasing power of your currency. We're looking at political risk. We're looking at inflation, which is tied to currency risk, and even banking risk. But last year, Egon, in 2024, as we were heading into it, I was in Vancouver and I was pretty bullish on the markets, not because I have a lot of respect for them, but because they're very Pavlovian. I was saying risk on. Powell's already making it pretty clear he has no choice but to cut rates in 2024. That's obviously a tailwind short term for the S&P and the stock market, and that's exactly what the markets did last year. This year, I'm far more risk off and far more bearish, because as the facts change, your opinions change. And keep it simple. We could spend all afternoon talking about market risk, but look at the Buffett indicator. Warren Buffett, whatever we think of Warren Buffett, he certainly understands valuation. The markets, the Buffett indicator is really just the total market cap to GDP. And I'll put it up here. And we're at all-time highs in the Buffett indicator, over 202%. And as Buffett said, this is the best single measure of where valuations stand at any given moment. And we're seeing massive overvaluation. And as this graph shows, whenever there's a massive peak in the Buffett indicator, it's usually followed by a severe fall. And we could talk about yield curves and overvaluation of NVIDIA, but the implied future return, including dividends based on the Buffett indicator, is 0% for 2025. Now, could be wrong, could be up or down, but I don't think it's going to be far from that. The other fact that insiders at
And Matt,
NVIDIA,
and that when you say 0%, that's not for just for this year. With that kind of risk, to correct that will take many, many years, or it can take a very quick fall, of course, of 80, 90%, which is also possible. But, when you say, you've got to get zero return, it's not just this year. It's for, markets take a long time to adjust, don't
right?
they?
And the QE solution of just printing instant liquidity to solve it, even if they did that, would require a lot more QE than before. And that, of course, just destroys the currency. They're all tied together. You have to look also, to your point, I mean, when guys like Bezos are selling their stocks, or NVIDIA's CEO is selling their stocks, or when Berkshire Hathaway is going to cash, those are pretty smart guys in the room, whatever you think of
Yeah.
them. And there's a lot of insider selling. And again, we could spend all day on the stock market, but it's clearly all bubbles pop. We're certainly at the top right now based on the Buffett indicator. And our good friend Ronnie Sturflet at Incrementum had a great graph I'll post here as well on the bond market. And looking at the most important sovereign bond in the world, the 10-year US Treasury, he shows in this graph that it's been a 10-year secular decline. And now it's underwater when measured against inflation. So you're losing money on the 10-year US Treasury. Not a coincidence that the Bank of International Settlements made gold a tier one asset right next to the 10-year, because the 10-year isn't a reserve strategic savings asset. Gold is a better savings asset for the reasons you talked about. So yeah, we've got major market risk, and I'm much more bearish than I was a year ago based on these trends that are changing and becoming obvious. And to your point, when a market crashes, it takes a long time to get back to where you started. So you've got to be careful about the market risk on the political risk, and then we can talk about some others. But Egon, you're a European. I'm a European American. I was just reading the Süddeutsche Zeitschrift. It's a German magazine, a German paper. I'm not a big fan of Olaf Scholz, but as you know, he's been band-aiding a coalition government, just like the Canadians have tried. Trudeau just recently announced his resignation because he too had to fire a finance minister. It's a financial mess. And I'm not trying to criticize the Canadian people or the German people. Olaf Scholz had said, Germany makes up 1% of the world population, but it's the third strongest economy in the world, however depressed it is. It's a very fleeced, a very hardworking culture. It's being hoodwinked by its government and its debt policy. It's very sad because Germans work hard, Americans work hard, Canadians work hard. Their governments have put them into a debt trap. But the political risk is I see in the U.S. certainly a major swing from the left to the right. We've seen that all over Europe. We're seeing that certainly in Canada. We're seeing that in France, the UK. There's these swifts. Many will say, well, that's because progressive policies have failed, the lockdowns, the weaponization of the legal system, the censorship, the media, the woke movement, the kind of self-censorship gone too far, and there's been a political shift to the right because of that. I think it has more to do with money than progressive. I think it's more about populism. People are broke. Another simple fact, Ontario, wealthiest province in Canada, its GDP per capita is less than the state of Mississippi, which is the poorest state in America. So Canadians, hardworking Canadians, like hardworking Americans, are getting crushed by debt. They're getting crushed by low quality of life, a debased currency, and they're voting with their pocketbooks now. They're broke, and the cost of their housing and the cost of their credit cards, the cost of their cars is, but their wages are not, and their currencies are getting weaker, and the inflation is getting stronger. So even when you look at markets, when you look at politics, they're cracking. And whether you look at the Oliver Anthony indicator, this guy from Virginia singing about how his dollar isn't worth
But
anything,
but if
people
you
are
can I ask
frustrated.
you if
Mhm.
you now new president comes in and obviously he's got a lot of confidence as we know. But
Sure.
the forces that he has against him, the forces we're talking about, market forces, even debt forces, but
Mhm.
and also the war risk,
Yep.
which is or geopolitical risk, which is much greater than he has pretended it is. So
Mhm.
those, do you think that there is any chance whatsoever that Trump can have an effect? My view is that he will have one obstacle after the next,
Yep.
and the market forces are much stronger than Trump, although he believes he's stronger than everyone. So the risk is very much that he will fail as a president and be very much disliked after these 4 years, in my view. What's your view?
Yeah, it's unfortunate. I was cryptically not trying to be smug, but I said during the election period, Santa Claus, Papa Smurf, Mother Teresa, Albert Einstein, it doesn't matter who's in the White House. The problems facing whoever was going to be elected are going to be massive. Trump has tremendous confidence, tremendous desire to make change. I think what we can say, there were certainly the opinion that whoever was in the White House in the last 4 years wasn't doing much. That's not trying to be partisan, but there wasn't strong leadership. Whatever you think of Trump, love him or hate him, and it's a very polarized question to ask any room in any conversation in America or Europe these days. You can't say that he isn't going to try, that he isn't going to do things. Well, that he'll be successful is very different. This Department of Government Efficiency with Vivek and Musk, very controversial, cutting jobs in DC. Well, 25% of US GDP comes from government. So if you cut jobs, it's also going to be inflationary, I think. If you have a tariff issue, there's debate. That's still inflation. It's expensive. So to your point, Egon, not to disparage the desire or even the promises that Trump, I believe, made with good faith, it's going to be very hard for him to do this without incredible spending, without
I mean,
incredible
let's take
debt
just an
expansion.
example. Sorry, before you get on to that,
Yeah. Mhm.
this Greenland. I don't know if it's actually making Greenland part of the US, and they want to buy America wants to buy it from Denmark, which
Mhm.
owns Greenland, because it makes them strategically strong against Russia. But you can't
Mhm.
on the one hand go to Putin and say I want to make peace and Ukraine, etc. We'll stop that. And on the other hand, we're going to put another 1,000 or 10,000 missiles on Greenland, pointing all towards the whole of Russia. It
Right.
just doesn't add up, and that's the typical logical or illogical thinking of Trump.
Right. Well, that the Greenland thing, and also let's just get the Panama Canal back. Again,
Yeah.
you can understand the optics of that. We paid for it. It's beneficial. We're not getting the rent from it. It makes a lot of sense optically. Politically, to your point, whether it's Greenland and Russia and ending the war in Ukraine or getting the Panama Canal back or exporting or repatriating every illegal alien that came in with a criminal record, those are optically important things that make sense, but to actually get them accomplished, and certainly in the first 2 years before the next midterm elections, without spending a fortune, running into political roadblocks, or massively creating an inflationary problem in America, or even the deflation of a recession, which is coming, it's impossible to know how any one man or regime can solve all that in 2 years or 4 years. One thing about Trump, he isn't going to be running for reelection, so he's going to do the best he can. But to my point, cryptically, it's not about being anti-Trump. And no one can do that easily, and no one can predict how Putin's going to react, how Panama's going to react, how Greenland's going to react, or where the world goes. But what we both agree on, Egon, is when society gets desperate, when people are broke, when their purchasing power is worse,
Mm.
uh, centralization kicks in, scapegoating kicks in, distraction kicks in, inflation kicks in, oftentimes war kicks in. Now, Trump doesn't want a war with Putin. I'm sure of that. I believe that. But again, we have a lot of unknowns that you and I and no one can say with certainty are going to play out in the next 4 years and the next 2 years. What we do know, what I think I can say without regard to partisan politics, is that none of these things can be done for free. All of these things are going to require more fiscal spending, more debt, and more monetization of that debt through the debasement of the purchasing power of your currency, whether that's in the Canadian system, whether that's in the British system, in the Japanese system, and certainly at the home of the world reserve currency. So that all roads lead to inflation, as Paul Tudor Jones said. They also lead to gold, because what is gold? It's an antidote to fiat money destroyed by debt. And I'll show another graph here, Egon. We're racing towards global debt of 400 trillion, and 400 trillion in debt with only one third of that in GDP. So the next graph that goes obviously with the 400 trillion in debt is the fact that in the last 20 years, the global money supply has gone up by 5x. When you add that much water to the wine, you dilute the flavor. When you add that much money supply to the global currencies, you dilute the purchasing power. So again, all of these things, politics, markets, debt, war, they all lead to some type of currency debasement. And that all leads to the conversation on gold. It isn't gold bugging anymore. It's history, Egon.
Yes, it is. And the sad thing is that the world doesn't understand gold, doesn't understand what's happening to their money. And as I said before, the people believe that there is inflation. And talking about inflation, wherever I move around, especially in Europe, every country, whether it's France or Italy or England or Sweden or Switzerland, inflation
Mhm.
is not 2, 3% or 4% maximum. Well, normally or generally, most countries talk about inflation of 2% today, maybe slightly higher. It's not 2%. If you wherever you go, things are 10, 20% higher. It's just
Yeah,
ridiculous, these inflation figures.
yeah,
They're
yeah,
just politically manipulated figures to
yeah.
protect the government from the attack of the people. But anyone who goes to a shop or buys insurance or travels, they don't see that the prices are up now. I think they're going up exponentially.
Hmm.
And it's frightening. Actually, people are not going to make ends meet already now, and that's going to get a lot worse. And as we
Hmm.
said, that's what gold reflects. Nobody sees that, but is that gold is not going up. Gold has been an ounce of gold's been worth buying the same thing, whether it's a suit of a man, or food or whatever, buying the same
Hmm.
thing for thousands of years. Prices in gold haven't gone up. It's just
Yep.
that the value of paper money has gone down, and that's the world measures their wealth in currencies that are declining now at a
Hmm.
very rapid rate. And
Hmm.
you and I think that that's going to accelerate in coming years. I mean, the end of the monetary era first normally leads to inflation, hyperinflation. And I think we are seeing that in the real prices, not in the government fake figures, inflation figures,
Yeah.
but the real prices are going up dramatically now. And this is
Yeah.
why we come back to gold again, because all gold does is really, well, number one, if you hold it outside the banking system in physical form, then it's your money, it's nobody else's liability. And that's it.
Mhm.
And now with the banking system, that is on the verge of collapse. You know, the
Mhm.
debts we're talking about and the bad debts are escalating rapidly, and
Mhm.
the banking system is most likely going to have problems much bigger than we had a year and a half ago, 2 years ago, when Silicon Valley Bank
Mhm.
collapsed, and also, of course, the Credit Suisse in Switzerland. I think we're going to have a serious crisis, a banking crisis, that also will lead initially to massive, massive money printing until they can't save the banks anymore. This is
Yeah.
why people have to protect their wealth by having assets, real assets outside the banking system. Um, so,
Mhm.
yeah, but that's the prime function of gold, as we know.
Mhm.
And number two is it protects the holder of gold against the debasement of the currencies and the falling value of their money in their pocket or in the bank, and the rising costs of all the goods.
Mhm.
So it's so simple. That's why governments will not tell you this, because they are not going to tell you the truth. They don't want to tell you that they mismanaged the economy. And except for the Chinese government, basically no government tells their people to buy gold.
Yeah. Well, it's an interesting point. I mean, look, it isn't sensational, Egon. I mean, I've said it many times, Jean-Claude Juncker, the former president of European Commission, when the facts are bad, we lie. We just lie. We make it up.
Mm,
It's not
mm,
sensational to say that the Bureau of Labor Statistics definition of inflation is accurate. It's totally inaccurate. It's not a lie. It's not sensational to say that the temporary inflation promise of Jerome Powell, that was a lie. It was a lie when Nixon said that going off the gold standard would be temporary and have no effect on your dollar. That was a lie.
mm,
These are things that are just open now, hiding in plain sight, lies that no one talks about. The compounding effect of real inflation is far higher than what the government tells you. That's not trying to be anti-political or anti-American or anti-Swiss or anti-European. It's just being common sense honest. We all feel it. And to your point too, banks, we had a major banking crisis 2 years ago. No one talks about it anymore.
mm,
Credit Suisse bailed out. Those are three of the four largest bank failures in America. No one talks about it.
mm.
Honest guys like Thomas Hernick will say our banking system is extremely weak when you look at its capital to assets ratios. The number of non-performing loans on the balance sheet of US and Chinese banks are appalling. So we have major banking risk that no one talks about. We have major inflation risk that no one talks about, or they misreport it, whether it's inflation, whether it's the strength of the economy, whether it's the labor markets that were so strong all year, according to Powell and Yellen, and they just revised it all backwards at the end of the year. These are lies, open lies that
Mm,
people
mm.
are feeling, even if they don't study the markets.
Yeah.
They feel it at Walmart. They feel it at the car lot. A Ford 150 max out is $130,000 for a pickup truck. Come on. How
Mm,
are you going
mm.
to do that when wages aren't keeping up with inflation? So all these things are signs of failed government, failed debt, failed currencies, for which gold always gets the last laugh, not smugly, but gold doesn't do anything but hold its value, while currencies are very busy losing their value to monetize the debts of criminally negligent governments and central banks.
Yeah, absolutely. And people, you know, anybody in inflation or high inflationary countries like take Venezuela, um, or take Zimbabwe.
Mhm.
Anyone who had just a little bit of gold, you don't have to be rich to protect yourself. You just buy an ounce of gold is expensive today, costs
Mhm.
almost $2,700,
Mhm.
but you can buy half an ounce, a quarter of an ounce, a tenth of an ounce,
Mhm.
or you buy silver. Silver costs $30 an ounce. And that is
Mhm.
extremely good value today, I would say. Silver is going to go up much faster
Yep.
than gold, but it's higher risk also because the
Yep.
volatility is higher. But for the ones
Yep.
who don't think that they can buy gold because it's expensive, just buy silver. And that's
Yep.
going to protect you when you really need money when the crisis starts, because there will be a crisis. There will be a massive economic crisis. That could
Yep.
also be social unrest,
Yep.
and sadly, linked to that, we have, which we haven't talked about. It's likely that we're likely to see terrorism also all around the world. You know,
Yeah.
the Muslims around the world are not going to uh, uh, be happy or accept what's happening now in Palestine
Yep.
and in Israel,
Yep.
etc.
Yep.
And you know there are major risks that we will see terrorist
Yep.
attacks. But coming back, you know, buy a little bit of gold and then or silver if you can't afford the gold.
Mhm.
Put it in a safe place, and then enjoy your life, because I mean that's what it's all about at the end of the day.
Yep.
As long as you have
That's
a
it.
little bit of money to buy food and a roof
Yep.
over your head, then it's all about friends and family looking after each other, helping each other.
Yep.
Um, and that's why, you know, the world has gone through many crises before, and
Yep.
except for a nuclear war, global nuclear war, which we couldn't do anything about if it happens. But except for that, the world will go on just as it always has, and we will have tougher times in coming years. Whether it starts this year or not, yeah, I think it's likely to start, but it's going to take many years to actually materialize
Yep.
and hit people. So we don't want to be prophets of doom and gloom. We just want to
Right.
be our listeners and viewers to think about, you know, a bit of protection now. Don't think markets are going to go up forever. Trees don't grow to heaven. The risk, and that's what you should look at. The risk is higher than ever now, and the time to protect yourself and your family is now.
Yep.
Not when things have collapsed, which they will do, and they will start this year. I'm absolutely certain.
Yep. No,
Matt,
Egon, these are all important risk themes, all of them, and we can't be castigated as just doom and gloom. You know, I was bullish and bearish on different things, but the trend is obviously dark right now, and no one party or person can save us. But we can act as our own central bankers, our own common sense, our own politicians over our own lives, whether that's financially, morally, or personally. You can take control of your own life. You can be your own central bank. Don't wait for someone else to save you. You can do your own things.
absolutely. And remember, gold is nature's money. It's the
Hmm.
only money that nature has produced. And that is
Hmm.
why gold is the only money that has maintained its purchasing power throughout thousands of years. All other currencies go to zero. Think
Yep.
about that. All
Yep.
right. Thank you very much, everyone, for listening. We'll be back again, Matt and I. And
Yep.
if we didn't say it, happy New Year to everyone.
Yes, of
Thank
course.
you.
Always important.
Bye bye.
Cheers.